Good morning, everybody. It is Wednesday, December 27. It's just around 4:40 in the morning. I've been kind of going at this for a couple hours already. I've got a really bad toothache and not able to get that nap that I need to. Well, here we go. Let's get ready to go into this. Wednesday today. Tomorrow is Thursday. As I was mentioning, and I've shared in the email for you to give you examples going back year after year after year, tomorrow would be T plus 2. Whereas transactions to sell your stock tomorrow with the 2 days go on it, trading day plus 2, would be recorded as a sale on the first trading session of the new year. Thus, for tax purposes, it would not be included in your 2023 tax. It would be for your 2024. And we've discussed this a little bit about how why would you sell a stock that is up 200, 300% and pay taxes for it next year when you could just sell it later in the year, end of the year, beginning of January, and you don't have to pay taxes on it for another year. So, tick strike. Sorry to keep you on here. Nothing today. Absolutely nothing. US Red Book, Richmond Fed Compact Index, nothing. 5-year note auction, nothing, and nothing. There is nothing on there, okay? So, I'll keep this very quick, keep it very simple, and try and go over big, broad strokes as to where you are and how you got here. December began 45, 59, 43. Zero question, zero that we are getting a green month. Second green month in a row. First day of the month, up, green close, gap down. Okay. Then we had 3 red closes in a row, 4, 5, and 6. That was when we were with our full moon, 45.37, and it looked as if, we might have something here. 45.99, that was right there, December 1. And then on December 8th, we blew into the 4600s, and we blew through the 4600s in 3 days. Keep that in mind, 3 days through the 4600s, gone. Since December 7th, we have closed green every single trading session other than last week, Wednesday, when we had that 46.9782 break out of the 4700s, minus 80-point move, fastest minus 1% move on the SPX for the year. We closed red, minus 70 points. OPEX Friday, December 15th, we closed not even minus 1 point. So the greens are stacking up, and you can go back to November, October, December of 2021, see exactly what it looked like then and exactly why history doesn't repeat itself, but a lot of times it rhymes. Yesterday, the spread I threw out there well prior to the opening bell was the 47.85, 47.80s. They were $1. They got down to 50 cents midday, and midday you could see already early in the morning as we started closing into the afternoon, it was an algo day. Algo days are days when dips don't occur. They just simply grind straight on up, looking for a price target that they're needing to hit. Where did we hit? We hit 47.78, went right through it and right back underneath it. Dollar credit, 25% on your money, $4 risk, dollar credit. Ended up, like most do, full credit. A couple of them that were able to stay awake in that very boring trading session there, right into that final 30 minutes of the day. You got 250 credit. 250 credit on 250 risk. Can't beat 100% on your money any day of the week. So 25% from what I threw out there, there was definitely 100% to be gotten, and 47.5.65 is your close. So QQQ is what's in charge. All right. That's why you see me mentioning over there in the room, QQQ is what's in charge. QQQ made it not only to the 410s, but made it into the 411s yesterday. New high. Was a tiny, tiny trading range up until that last 30 minutes of the day where it finally got a 2.4 point range. 9 green weeks, 9. Same thing with the SPX, same thing with SPY. And thus, for today, knowing my 4778 spread I've shared over in the room is the 47.85, 47.80s. They're getting $1.85 right now. You might maybe get $2 fill. You might. For those of you that are willing to embark on getting a red week, meaning a close below 47.58, understanding that we have a 4-point gap over the weekend, 4 whole points down there at 47.54. A red close on Friday would be a close below 47.60, thus buying the 47.65 calls, selling the 47.60 calls are getting $3 or better at the moment. And thus, for those of you that want to take on a $3 credit with a $2 risk for a 150% potential return, that's the trade for you to take on. So take you really quick over to the charts. SPY right up there to that 476.30, the 2022 open, peaked it, came right off. 5-day moving average, 10-day moving averages are moving up. 20-day moving average, I don't think that it's applicable to put it on the screen as of yet because it's still a little bit too far away. But these are your primary focus points for short term. 5-day moving average, 10-day moving average. Bring it to the QQQ because the QQQ is in charge. And again, coming off the October lows where you basically triple bottomed, quadruple bottomed going into December of last year, which was 4 red weeks in a row. Going off the FOMC meeting into the end of the year, 4 red weeks in a row. Final week, this week that we're in right now, 1 year ago, was dead flat. Nothing. So off of that, we have a very clean 1, 2, 3, a very nice 4, and here we are in our 5. After our 5 completed, is completing, will complete, you would be looking at your retracement to the downside, and that would depend on whether or not this produces as a bullish beginning of only the first wave, which makes absolutely no sense, or if this was all of the B wave, with the A wave having come down from 2022. Here is our B wave. Zigzag, very potential as well. Don't know until we get our drop for our decline. And our decline won't be bearish until we break down below the October lows, which is way down here at 344. So a lot of space in there for a lot of play to be made as we progress into the first quarter of the month or of the year. Zooming in and going on to our detail, the gap from last week down there at 403.08, still unfilled, still very high potential. But until you get a break below that 408.71, all we're doing is waiting for tomorrow being T+2, and showing you the history of what that T+2 does. So very nice wedge pattern looks like it's forming here. And until we can see a break below 408.71, you're going to be stuck trading the SPX 4760 puts. The 4760 puts are the ones that went berserk a week ago Monday or Wednesday. Those are the ones that went from 60 cents to nearly $60. 4760, 4763, 4765, that is what is going to need to be broken before we can see any kind of aggression and excitement about filling that weekend gap down there at 4754 and potentially testing that little dip low right there at 4750, where our 5-day moving average will be moving up above today. 10-day moving average will be moving up above today. over to that 47.38 area. So very, very slow progression as we go into the last couple of days of the year. Keep it light, keep it tight. And those of you that were able to wind up staying awake, that were on the trigger, just to give you an example for those that don't believe, 3:30 as you had your pop there, the 47.80 puts were down at $1 basically, and they popped up here up to above $7, closed at 450. You don't need a lot on the table in order to get a nice return. The 47.60s at 60 cents as a lotto did not work. Credit spread worked out perfectly. Some days you break even, some days you break the bank. So I will leave you with Intel. And what we're looking at here on Intel, this one I can remove because it is gone and dead, is a big, broad, wide view of Intel. And here you see the dot-com highs at 75.83. Your big drop into 2009 and your recovery into 2020. Okay, 2020, not 2022, not 2021, 2020. Zoom you out in 5-week view. Here's your January 2020 high, and then right up again there, 2021 in April, and your absolute demolishment. Demolishment as in virtually taking yourself back to your 2015 lows from way back here. So where you are now with this massive new, we are going into the new territory that Israel's created because they have all this new land that they've just recently cleared with their $25 billion chip plant. You've got a gap over here at 48. And as this very much looks clean, coming off of October, very clean, I would expect that you're looking at a top over here on Intel. And as you go into January 19th, the lowest strike that I would choose would be the 48 puts. I would be expecting to see a recline on Intel, decline back into 47, 48, 47.34, and most likely retesting that 45 area. So that's what I'll leave you with. SPX again, 35-point dip, 36-point dip, no dip. Oh my God, the market's broken. Oh no, we're not going to ever get a trade again. Well, come on, guys. It's the end of the year. T+2 is tomorrow. And don't forget, as I found out from somebody posting, there are other ways that you can make money by click ad revenue on social media. Just ask this guy.